What's going on, guys? Tony Ivanov here with another video lesson, and today I'm going to talk about the stock that I alerted in last night's video lesson that had huge potential to move. You can see here it is, FRFS. Yesterday it ran 3,000%. Today it ran another 200%. So very, very, very liquid stock, very, very volatile stock. If you don't know why this ran, click the link up here. It'll take you to my lesson I made last night. It's at the very end. You can skip the first 10-15 minutes or so if you do not want to learn about NASDAQs. This is an OTC stock, so it does have more risk than NASDAQs, but with more risk comes way more reward. And you can see there's a lot of reward to be made with this stock. The whole low-priced OTC market has been running for the past couple days now. If you've been watching my video lessons, you can see that the OTCs have had some very, very hot dollar volume. Let me just rank this by dollar volume. You can see there were 3 stocks that had over $1 million in volume. The hottest one had 2.8 million. One had almost 5 million, but that barely moved. So yeah, if you are new to my channel, I appreciate you stopping by. I make these video lessons every single day, even on the weekends too, so make sure you hit that like and subscribe button so you can be alerted whenever they come out. So yeah, let's just talk about FRFS real fast. So this had a really big move this morning because it had a gap up. The reason why it gapped up, you can find it in last night's video lesson, but basically this is a reverse merger, and after hours there was some more news released on who is doing the reverse merger. So highly recommend you check that out. I do all the DD in there so you can learn how to do a proper research. I'm not going to go into that right now because I'm on limited time, but just to see how this ran. So let's just draw some trend lines first, like we always love to do, because we're mainly day traders. Don't forget that. Us day traders, we love to draw trend lines. We love to use the chart to plan our trades. So first off, we draw out yesterday's high of day here at 0.304. So that's the obvious level it needs to hold if it wants to sustain this run. And you can see it played a very big role here. But let's just focus on the morning real fast. So in the morning, I made the mistake of using the 1-minute chart, and that led to my my downfall on this play. So what I really want to talk about today is that even if you know a stock is going to go up based on news or something else, you can still lose on the trade, and that all is based back on risk management and knowing where to buy and sell. So I was watching this in the morning, and when it was gapping up so large, I was giving out alerts in my chat room saying that it'll likely have a small retracement right after the market open, because there's people who are buying right at the bell, and then it's not going to have enough buying power, so people are going to take their profits back, make it drop back down, and then that's when the wave of buyers will come in. So I told my students to make sure you wait until you see that one dip and then buy into that dip. So I did that perfectly. I did not get as many shares that I wanted. I got around, I think it was 10,000 shares at 0.036, and I made 100% at the top of this run here at 6 cents. But I just had some classic mistakes. I got too greedy. I expected this to run a lot more. I wanted to have more shares, especially because my plan was to have around $2,000 worth of shares into this play, just because it can run so much. So only having 500, I was kind of not happy with it. So I held on to those shares, expecting the stock to have a small retracement and then a U-shape, a breakout, and run even further. But we didn't get that, and I just really played this pretty badly. So when I saw this dip right here, I bought another 10,000 shares on this dip. I bought another 10,000 somewhere in here too at the 5 cent level, and those just failed really badly. And the reason why it was a really bad idea to place those trades is because the overall support, like we said on the chart, is this high of day at $3.20. But what my mistake was is that I tried to make my own support and resistance levels. So the main thing that I want to stress, the support levels that a stock makes intraday is not nearly as strong as the supports that it makes multi-day. So what I mean by that is that this level is much more significant than the level that I was playing. Let me just draw out real fast. I can't remember exactly what it was. I think it was right here. Yeah, I was playing off of this this little support here. So you can see it dipped back down, bounced off of that, made a higher low, lower high. When I saw that, the first thing I did was I drew my descending trend line, and I was hoping that we would have a nice wedge breakout of this, but we did not get that. Instead, we got a crack of that support, and it just walked all the way down until it tested this level, and then it bounced back up, retested that one more time to confirm it. We had a nice Bollinger Band squeeze in here, and then it just ripped on huge. So what I really want to stress is that you need to be patient. The thing with my trade today is that I had the fear of missing out. That's a very classic problem with traders who think that you know, when a stock spikes, it's going to go straight up and you're going to miss the whole run. And that's simply just not the case. Stocks don't go straight up. They're going to have pullbacks. They're going to have periods of consolidation. And what you have to really do is you have to just understand the chart and understand where the actual real levels of support and resistance are. The real level of support was the previous high of day, because if it broke below the previous high of day, then that's obviously a huge sign of weakness. This level here at what's like $4.20, it's not that significant, mainly because right here at that level the stock was still up 80%. So it was due for a pullback. It was a dumb move of me using that level as a support when it had such a big rip. So that's really just what I want to say today, is that you need to understand the importance of multi-day support and you know, the strength of intraday support. Intraday support is not going to be nearly as strong as multi-day support. So that's one of the main mistakes I made. So I took a loss of around $170 on this trade. Not bad at all, because my plan was to make like a couple $1,000s, because this had just huge range and volatility. So my risk reward was really good. I risked around $200 to make $2,000. I'll take that any single day of the year. That's a really good trade. You can lose 10 times or 9 times on your 10th one. You make your money back and more. So no big deal on that. Just what I really want to stress is that you have to be careful here in the morning. If you see a big rip and you miss the big rip, just be patient. The stock will pull back. It'll find the proper level of support. If it doesn't, then it wasn't a good trade for you to make anyways. You have to understand that if you want to be a consistently profitable trader, you have to stick to 2 to 3 patterns with very strict rules. And I broke my rules today. I'll just say it over and over again. I broke my rules, and that's why I took a loss. I want you guys to not break the rules so you don't take the loss. I had a couple of traders in my chat room who banked pretty damn big on this because they followed their rules, because they understood, okay, the actual support is here at $3.20-ish cents, or not $3, 0.320, 3 cents. So now we're going to go into the actual spike. And one mistake that I made too was I was using the 1 minute chart. On a play like this, when it's not as quickly traded, use a longer time frame, because it really has the chart have much less noise and much less randomness, so you can read it better and you can understand it better. So now that we're looking at the 5 minute, it's such a more clear pattern. You can see we had this downtrend, and then you can see the rounding out of this bottom. It has a nice rounded bottom here. At the same time, this 60 moving average on the 10 minute was coming up. So this is a very nice period of consolidation. Whenever you see a really big rip, you have to have some consolidation. And the more consolidation you have while still holding support, the larger it's gonna rip. And you can see this ripped from around 3.5 cents up to 7.5 cents, so over 100%, all because of this nice period of consolidation. So a couple of signs that you could have used in this area is, one, you could use your stochastics right here, super low stochastics, very nice. At the same time we had low stochastics, we were bouncing off of that previous high of day, so that's a very good place to buy. After that, you can just use the Bollinger Bands. You can see here the Bollinger Bands squeezed very tight, super tight right here, squeezed. What that basically means is that there's a period of upcoming volatility coming up. It doesn't tell you which way it's going to go, but that's why you use your other indicators to hint at which way it'll go. So what I saw here is the 50 moving average was just pressing this on up. It just kept pressing it on up. And at the same time, the 10 moving average, it never crossed below, you know. In our past lessons, I've told you guys about the 1060 cross, and what that basically means is that whenever the 10 moving average will cross underneath the 60 moving average, that's a really good sign that it's gonna fall off and have a big downtrend. But you can see here, it never made that cross. It came very close, but it never actually completed that cross. So because of that, that's also a very good sign of strength. And also, if we look at the 1 minute, just real quick, go back to this. Nah, it's pretty choppy. Nah, I don't like the 1 minute. Bad idea using the 1 minute on this chart. Use the 5 minute. It really respects the 5 minute much more. So you could have bought on the dip, or once you saw this 0.36 level break, that's your buy entry, because you can see we're making higher lows and we got over this resistance right here. It was holding up as resistance for almost a whole hour here. So when you see the Bollinger Band squeeze, when you see the 60 moving average holding it up, when you see the 10 moving average bouncing off the 60 moving average, when you see the pop in volume, when you see the low stochastics, those are all good indicators for a dip buy. So that's the best dip buy entry, and I bought like, I don't know, $80 worth of shares because I wanted to reduce my loss from the morning. So I made a really good dip buy on this. My average was around 0.35, I think. Yeah, 0.35 was my average, and I sold into the sevens. So I made almost 100%. I made like $80 all said and then, because it was a small position, but it really helped me change my mindset on a play like this. So basically, how you want to think of these huge parabolic moves, you kind of have to think of it like Bitcoin. So you know how, let me just bring up the Bitcoin chart on my phone, because it really correlates with how these low priced merger plays move. So on the Bitcoin chart, you can see there's a rip where like, oh, it's going up, and then it dips, it crashes down. They're saying, oh, it's gonna crash, it's a pump, it's a Ponzi scheme. But then it catches support and it just rips back on up, and it does that over and over and over again. So basically what you want to do on a play like this, where it's running 100, 200, 1,000%, you don't want to buy the breakouts, you want to buy the dips, because all the novice traders are buying the breakouts because they want to, you know, make a bunch of money. But when the breakout fails, they're gonna panic sell and they're gonna bring it on down, cause a dip, and that's where the good traders, they come in and buy the dip and then ride the wave on up. They sell their shares to the chasers, and it just repeats over and over again. So on a play like this, you want to focus on dip buying it, because you just have to understand that stocks do not go straight up. They are going to pull back. They're going to dip. People will take profits. People will panic sell because of chasing, and you have to take advantage of those people who don't understand you know, the mechanics of day trading and trader psychology. So use that to your advantage. Focus on dip buys on plays like this. You could have bought the breakout, I guess, but you know, like I said, it's very choppy up in this area. I was telling Kyle that whenever you have to run 100% to make the breakout, it's not going to be that strong, because like I said, it took 100% to get up to that breakout level. People are going to be taking their profits, so keep that in mind. But we did re-dip back down, tested this 10 moving average, bounce off of it perfectly, and we spiked back up even higher. So you could have bought the breakout, but you can see the much better place to buy was in this dip, because right here you make 126% top to bottom. Now the 10 moving average was acting as really good as a really good level of support on this spike. So I was watching it and I was looking at this, and once I saw this cross below the 10 moving average, I knew it was going to have some sort of pullback. So that's where I sold my shares, right in this area, right at around 7 cents. So very, very nice move. I wish I used more size, but I learned my lesson on the trade. Basically, let me just recap. Don't have the fear of missing out. You will get a pullback, you will get a nice dip. The most important thing is that you have to wait until you get a dip to a really important level to hold, because intraday support, especially on a stock that's up, you know, 3,000% from its bottom, that intraday support, people don't care about it. It's just not going to happen. And this spike reminded me a lot about NEOT. If you watch yesterday's video lesson, you'll know what I'm talking about. But basically, NEOT had the same exact thing. We had a gap up, and it spiked up huge pre-market, but then it just fell on its face, retested support, and then it spiked up 100%. This is the same exact thing. It's just a different stock. Same exact thing happened. If you have a gap up, and it has a really large gap up, more likely than not, if it hits a really hard level of resistance, it's going to want to pull back, retest that support, confirm the support, and then buyers will pick it up and take it on its next run. So that's it for FRFS. There were a lot of ones that ran today. ADCF ran huge, ran over 150% top to bottom, I think. No, 500% top to bottom. No, let's fix that. 300% top to bottom. Very nice. Right here, classic dip buy entry. We have a high of day, lower high, higher low. No, I said that wrong. We have a spike, higher low, lower high, then another higher low. That's an ABCD. I talked about this yesterday. And then we get the breakout and it rips up huge. Eventually we broke support, and now it's just, you know, messing around. HPIL, also another one that ran huge. Kind of choppy. I wouldn't want to play this just because it is pretty choppy. Only had $183,000 of volume. I doubt this number is correct. What else was there? BYOC made a 52-week breakout, but it's kind of choppy. Let me just bring up the daily. You can see breakout levels right here. We spiked up a tiny bit, but we stopped out at that nice round mental resistance of 2.5 cents. So that's basically it for the OTCs. As far as NASDAQs go, I wasn't really paying any attention to it at all, just because I was really focused on that reverse merger play. But let's just check out. I know NEOT tanked pretty hard in the morning, and I know exactly why it did. So let me just look at this real fast. OPTT ran 36%, pretty good. Lots of dollar volume, lots of dollar volume. Let's check that out real fast. OPTT, very nice multi-day breakout over this level right here. $1.65, nice round mental resistance. Doesn't look like there was news, just a pure gap up play on momentum, looks like. Let's bring up the extended hours so we can see pre-market action. Okay, so yeah, so we had a major spike pre-market. We broke out of that high of day. We spiked up huge. Now, this is a different level. That's not 165. So okay, so we spiked up, found resistance here at around $2, and then we had a nice dip in the morning, and look where that dip ended up. This is just a really good example of why it's so important to look at the daily chart and look to see where there's multi-day support and resistance, because those are the areas that people really pay attention to. The intraday levels, people don't care about them as much. The multi-day levels, everyone sees those and everyone takes note of those. So you can see we dipped back to that 165 level, tested it perfectly, and we bounced off of it and ran, like, what is that, like 50%? Yeah, like 50% ran in the first 15 minutes of the stock market open. So very, very strong move. Yeah, this is a great play. Very good dip buy opportunity right there. So lesson to be learned, look at the daily chart. If you see any obvious levels of support and resistance, just draw a trend line and keep it there too. If you have a charting platform like E-Trade, whenever you draw a trend line, it'll be saved there for as long as you have the platform. So say we look back at OPTT a year from now, we're gonna have the level still there. So we're gonna know, okay, this was a significant level of support and resistance. So always leave your levels if you can. Of course, whenever the chart is too crowded with your trend lines, just clean it up a little bit. But you guys know how to do that. So NEOT, this had a very big crash today, and it was just a very simple reason why it crashed. So let's just take away the extended hours here, just so I can show you what's going on. It simply just broke support. It just broke a descending, or it just broke a trendline support here. You can see at the end of day we had these two dips. I saw those two dips. I drew my trend line, and at the market open we just crashed below that. That's all it was. We just cracked support, and no more buyers were here, because I've noticed that on the NASDAQ, on the second day of a news play, and especially a news play that ran over 100%, the second day isn't as hot. It's going to need some consolidation. It's going to need to reset and find a nice base level of support. And if the news is really good, it'll, revive itself in a few days. So keep this on your watch list. It still is a very good stock to watch. You can see on the daily we're testing this 200 moving average, so keep this on the watch. This could become a very nice play tomorrow on the mid candle breakout. So what that basically means is that if we can break out of this $2 level tomorrow, then this is going to have a very big run. You could try to play it and buy the high of day breakout right here at 193, but the absolute safest place to buy would be the break of $2, because one, it's a nice round mental resistance. If we can get over $2, that's a very significant move for the stock, because it has not been over $2 in a very long time. if we just look at the past history, you can see the last time it was at that level was back in June/July. So if we can get back over that level, that's very significant. Second, it's a breakout of the 2 days ago yesterday. It'll be 2 days ago tomorrow. So what that basically means is that we spiked up, we had a period of consolidation, and we pulled back, but then we were able to break it out and go even further. So that's a very good sign of strength. So keep that in mind. Put NEOT on your watch list. Put FRFS on your watch list. I can never remember the name. And that's basically it. Hope you guys enjoyed this lesson. If you saw value in this, I'd really appreciate it if you could like and subscribe. If you have any questions, comments, requests, you can find me on my Discord group. First link down below. I'm there all day. You can ask me whatever you want, and I'll get back to you as soon as I can. So I hope you guys have a great night, and I'll see you guys tomorrow on the markets.